Happy Wednesday, traders. Now, this is a question by John. John sent in this question like 6 times from last week. I know that I talked about the London session breakout, and in there I must have talked about the Asian box. If I missed that or if I did not do this, now this is how to trade the Asian range. Asian range. Usually people who have done or market maker, they know about these types of trade, the ones we call AR00 and AR50, or basically the Asian range trades. Now, John wanted me to explain how to take them, to take such trades if you're using your phone or if you're using your computer but you do not have the template. It's not mandatory. You don't have to have the template. The template, I mean the colors in here. You can actually just draw your Asian range by picking the highest point, the highest price point the market got into or during the Asian session, and of course the lowest point. Then you're just going to draw your box and that becomes your Asian range. Now with your Asian range, you also want, if you're going to draw it manually like a box, make sure you have the mid area or the center of that box. So at the top here, you have the Asian session 00 or the Asian range 00. At the middle, you're going to draw the 50, and at the bottom, you have 00. Now remember, you're trading this just immediately the market leaves the box, okay, or pre-London, okay, pre-London session or before London session, in between in here. So what do you want? You want to see the market leaving or hitting the top. Let's say it's for a buy session. Let's do an example with this buy session. So you want the market to, it's coming from the very bottom, did that high, but when coming back, it just trapped or touched the 50. It's advisable that you have an MA, and it's not compulsory, but it's advisable that you have an MA. Now for me, this is 13 EMA. You all know that my 13 EMA is the only EMA that I may check because of conference or extra confirmation. So if the market now gets from the high but does not go below your 50, then trades above your EMA or your MA, and remember for MA you can use any of your choice, then you have a buy setup, and this buy setup is going to be termed as AR50. Why? Because it tapped or trapped at the area 50. Now the same can happen if this market gets out, okay, continues out instead of coming back, continues up, and then comes back to trap at A0. Now note, this is the same as the London breakout, okay, based on the time that you show up. Just like this example here, see this area here, this is London breakout. It broke out the 00, retested it with this red candlestick and left. So for the people who are fast, you may have taken it as AR50, or for people who came in London session, they may have taken it as London breakout or Asian breakout, Asian high breakout, or break and retest of the AR00. Now on the flip side, on the other side, it's of course going to start from the top to the bottom, then back up to the 00. So it's going to be from the top, bottom, then back up to the 00 and coming down. That is version A. Then we have version B that can come up, then break that 00, touch it again or retest it there and down. So this is going to be AR00, while this is going to be AR50. I'm going to do a video, a clearer video at some point, but basically this is it. And this is some of those strategies that you can trade when you're really not sure about your bias, okay? Because they are counter trends. Some of these trades, They are very good at a counter, or if a stop hand trade happened and did not really materialize, the following day is going to do this. Now, I hope that is clear. Previously, you can see that this asset had this setup here that didn't move much, and therefore that's how it got into the Asian range setup. I hope that is clear, Mr. John. Happy trading, everyone.